Welcome, folks. Hope you're all doing well. So here we have gold. This is a 15-minute chart. So on Friday, this is Friday's price action, and then we had Thursday. So today we're going to talk about the inversion fair value gap. Here we had this gap, which was an inversion, which acted as support, and then we had this rally to the upside, aiming for these highs. So the way you could have arrived at that is, as you can see, we were in a range. So we had all this price action. We had several days inside a defined range. So maybe from this low to this high, we had that as our defined range. So during Asia, we had this is Asia. So the Asian range, we came all the way from down here, went all the way up. So if you take our fib, let's take our fib, anchor to that low, to that high, then that low. So as you can see, we went to a premium based on this price range. So we went to a premium and then came all the way down. So we had sell side, which was residing below these lows. Also, we had people trust that this would be support. So we had that. So we came all the way down from Asia. And during London Open, we took out this low, went back up again, traded into this fair value gap right there, and then went all the way down. So we traded into this inefficiency. We had an inefficiency right there. We hit that. We hit that, and then it was at around 4:45. So as we all know, the top of the hour is what we mostly capitalize on for our entries. So we trade mostly, our entries are placed during the top of the hour. So here we had this, and then we had now this gap. So if we take our fib, anchor it from that high to this low, from this high to this low, as you can see, this gap was at a discount depending on this price range, because we are now inside this price range. So we anchor our fib from that high to this low and determine where are we, where is the premium. So as you can see here, this is 0.5, the half of this price range. So we had these highs being at premium, and also we had this inversion fair value gap, which could only be defined as an inversion after price has traded past and came down to it and then acted as support. So we also treat that the same way you'll treat maybe a breaker, or let's say a bullish breaker or an order block. So price was supported. As you can see, there was no candle close below the midpoint of this inefficiency. So as you can see, we were this gap was at a discount using this dealing range. So since it was at a discount, you could not use it as a price to trade to it and then reverse. It is supposed to be traded to it and through, and then price comes back down to it and then continue moving higher. So as you can see, we traded down, took out Thursday's low and several other lows. So this was so significant, and also it was something that was so clear. If we took out this range low, so it was so obvious for us to aim for this range high. So, and that is what really happened. So as you can see, we came all the way down here, traded into that, and then we had now this rally to the upside. So this gap, as you can see, we went all the way up, traded back down into the gap at around 9:30, 9:45, which again is at the top of the hour. We had that, and then now we had this move to the upside during New York. So that is basically what an inversion fair value gap is, because as long as we have traded past the inversion fair value gap, and then we have other premium PDRAs, like let's say we had something like this inefficiency and also this high, so that would have been the draw on liquidity. So it is so simple. We took out the low. Now the next thing was the buyer side. So price delivered sell side, and then now it must deliver buy side. So that's it. That's basically it. So if we head over to let's say the 1 minute chart, because this is the 15-minute chart, then you can use now the 1 minute chart for our entries. Let's say we were to use the inversion fair value gap as our entry. So as you can see, this was at around 9:36. We traded down, took out those relative equal lows right there, traded up, shift in market structure, yes, and then we traded all the way down, hitting again. If we take our fib, anchor it from, that is the midpoint of that, of the inversion fair value gap. As you can see, we traded and there was no candle close below the midpoint, yes, but we also traded into the 75% of that, of the inversion fair value gap. So the only way you can know if this will support price is we are not supposed to trade all the way down to the 25%. We're only supposed to trade at least at the midpoint of the inversion fair value gap. So price went up, traded back into the 75%, and then we had now that push to the upside. So it was so simple. You could either place your entries anywhere around here, or wait for a displacement, then price comes all the way down, trading into an inefficiency, and then now could place your entry. As you can see here, was at around the top of the hour, which is at 10, which is 9:50 to 10:10. So our entries would have been at around 9:50, right there, 9:50. Price came all the way back, traded into this inefficiency. So that would have been your entry, and then long position right there, and then your stop. Your stop will be placed just below the midpoint of that gap, and then you could be aiming for, so if you head over back to 15, could be aiming for this high. So this would have been the draw liquidity right there. So 1 minute. Yes. Sorry. Yeah. So that's a total of 11 R. Yes. So that's a total of 11 R trade. So that is how you know that this is going to be an inversion fair value gap. So the only way you can use an inversion fair value gap is if you're at a discount price and the inversion fair value gap is at discount, then now you could use that gap as an inversion, because if you're at discount, you are aiming for a premium price. So it is so simple for us to determine an inversion fair value gap versus a gap that is to be traded into and then reverse. So that is what an inversion fair value gap is. Remember that it is supposed to be at discount when you're aiming for a premium, or at premium when you're aiming for the discount. So it is so simple. You have to have narrative of where price is headed to, and then put in now time being the number one factor. So as we all know, like London gives us either the low or the high of the day. So as you can see here, London gave us the low of the day. So it was so obvious that New York will give us the high of the day, and that is what happened. So New York gave us the high of the day, London gave us the low of the day. So this was a move that was one-sided. So if you had narrative, and don't just use the 1 minute, let's say you see an inversion fair value gap on a 1 minute chart. If you're not a scalper, then that won't help. So you have to know the narrative of the higher time frame. The 15 minute is okay if you're comfortable with the 15 minute, but at least the least time frame you should be using is the 15 minute as your higher time frame, so that you can be able to see these highs, the inefficiencies and all that. So it is so simple. Just look at narrative. You've taken out sell side. Now what is remaining is buy side, and then now you can say that if you can see a gap that has been traded to and through, then you can use that gap once price comes back to it as an inversion fair value gap. So I guess that's it for today, and I'll talk to you next time. Be safe.